Hello, my friends. Welcome back to our channel where we learn English through stories, and I share with you how I achieved 96% in IELTS and got a job in Canada. Today's topic is how to start Forex trading for beginners step by step in 2025. Before starting this lesson, let me tell you that I have designed this lesson in a way that it will help not only the beginners, but also the intermediate traders who want to improve their trading skills. So, without any further delay, let us start today's lesson. At the very beginning of this video, I would like to tell you a story. Once upon a time in a beautiful city, there lived a young man named Tom. Tom was a software engineer in a well-known company. He worked hard and earned enough money to live a comfortable life. But one day he decided to quit his job and start trading full-time. His friends and family were surprised because they thought trading was risky and unpredictable. But Tom was confident that he could make a lot of money if he put his mind to it. After quitting his job, Tom spent months studying trading strategies and testing them on a demo account. He learned about technical analysis, which is the study of past market data to identify trends and patterns that can help predict future price movements. He also learned about fundamental analysis, which involves analyzing economic and political factors that affect the markets. Tom practiced on a demo account so that he could get used to the trading platform and test different strategies without risking any real money. He learned to control his emotions and follow his trading plan. After months of practice, Tom was ready to start trading with real money. He started small, but soon he was making enough money to support himself and his family. Tom continued to trade and educate himself about the markets. He became a successful trader and never regretted quitting his job. So, friends, this is the story of Tom, who became a successful trader after practicing and educating himself. Like Tom, if you are also passionate about trading and want to become a successful trader, then this video is just for you. In this video, I am going to teach you how to start Forex trading step by step. Let us begin. The first step is open a trading account. To open a trading account, you need to choose a reliable broker. There are many brokers available, but it is important to choose one that is regulated and has a good reputation. A regulated broker is one that is licensed and supervised by a financial authority. This ensures that the broker is operating fairly and protecting the interests of its clients. You can check if a broker is regulated by visiting the website of the relevant financial authority in your country. A good broker will offer a variety of trading platforms, competitive fees, and excellent customer support. It is important to compare different brokers and read reviews from other traders before opening an account. Step 2. Fund your account. To start trading, you need to fund your account with a deposit. The amount you need to deposit will vary depending on the broker you choose and the trading platform you use. Most platforms allow you to deposit funds using a variety of methods such as bank transfer, credit card, or cryptocurrency. When depositing funds, it is important to be aware of any fees or commissions that may apply. The third step is to download the trading platform. Most brokers will provide you with a trading platform that allows you to buy and sell currency pairs. The platform will provide you with a variety of tools and resources that can help you make informed trading decisions. It is important to familiarize yourself with the platform before starting to trade. Now let's come to step number 4, which is log into your account and select a currency pair. Once you have downloaded the platform, you need to log into your account and select the currency pair you want to trade. A currency pair is a combination of two currencies that are traded against each other. For example, USD is a popular currency pair that involves trading the euro and the US dollar. When selecting a currency pair to trade, it is important to consider the level of volatility and the trading volume. Volatility refers to the degree of fluctuation in the price of a currency pair. A highly volatile currency pair can result in large profits or losses, while a less volatile pair may result in smaller profits and losses. Trading volume refers to the amount of currency being traded on a particular market. A high trading volume indicates that there is a lot of interest in the currency pair and that it is likely to be more liquid. Now, step 5 is to place an order. Once you have selected a currency pair, you need to place an order to buy or sell the currency. An order is an instruction to the trading platform to execute a trade on your behalf. There are different types of orders that you can place, including market orders and limit orders. A market order is an order to buy or sell a currency pair at the current market price. A limit order is an order to buy or sell a currency pair at a specified price or better. When placing an order, it is important to consider the amount of currency you want to trade and the stop loss and take profit levels. A stop loss is the maximum amount of money you are willing to lose on a trade. A take profit is the amount of money you want to make on a trade. By setting these levels, you can help to manage your risk and protect your account. Now, coming to the most important part of this video, which is step 6, which is to learn how to read the charts. Reading the charts is an essential skill for successful trading. It involves analyzing the price movements and patterns to identify potential trading opportunities. There are various chart patterns and formations that can indicate when the price is likely to go up or down. For example, a bullish trend can indicate that the price is likely to increase in value, while a bearish trend can indicate that the price is likely to decrease in value. Additionally, traders can use technical indicators such as moving averages and relative strength index to help identify potential trading opportunities. These indicators can provide valuable insights into the momentum and volatility of a particular market. By learning how to read the charts and use technical analysis effectively, traders can improve their decision-making process and increase their chances of success in the Forex market. Let us now come to the final step, which is step 7, which is practice on a demo account. Before starting to trade with real money, it is important to practice on a demo account. A demo account is a simulated trading account that allows you to trade with virtual money. This can help you to gain experience and confidence in the trading platform and the market conditions. By practicing on a demo account, you can test out different trading strategies and find what works best for you. You can also use this time to get comfortable with the trading platform and familiarize yourself with the different features and tools available to you. Additionally, practicing on a demo account can help you to develop your risk management skills and learn how to control your emotions when trading. It is important to note that trading on a demo account is not exactly the same as trading with real money. However, it can still be a valuable tool for new traders to learn and practice before risking real capital. Friends, these are the 7 steps you need to follow if you want to start Forex trading. Now let me tell you something. Just like Tom, if you also want to become a successful trader, you need to be passionate about it. Trading is not easy and it takes a lot of hard work and dedication to become successful. However, if you are willing to put in the effort, it can be a very rewarding career. That's all for today, my friends. I hope you enjoyed this video and learned something new. If you did, please hit the like button and subscribe to our channel for more videos like this. Thank you for watching and see you in the next video.